just really quickly to throw in the pioneer gap that we're all familiar with, and I think a few of you are actually maybe in the middle of it. That in itself is a significant barrier to scale. I mean, you see at the startup stage there is what we used to call at the foundation, we called it the 4 Fs that are willing to invest in early stage scale up: the friends, fools, families, and foundations. Whereas in the scale-up phase of your business, prior to you becoming financially viable or even generating some income, there is a very thin group of potential supporters. And only once you get to that point of financial viability, there is the usual impact investors that start looking at you. Now that pioneer gap in itself, I think, is very thinly spread. And what entrepreneurs really need at that stage is not just the money, whether it's grant or some other form of capital, but it's primarily the support and the more the money offering that that you could get. It is what you're talking about, getting your business investment ready, market linkages, business development assistance, and I think connecting the available money out there, which definitely is there, with the needs of investors is definitely a start of bridging that gap.
Yeah, I think we should recognize that it's difficult to scale. Period. It doesn't matter if you're a clean tech company or you're in a different industry. I mean, scaling is always difficult, and I think many companies in many sectors fail, and they can't scale, or they get stuck, and they or run out of cash and fail as a company. And also, I think you can credibly argue that clearly, as Jeroen was saying, the clean tech industry has its own significant challenges. Right, you're working in many times rural areas, which is very complicated. You're working and testing new pioneering models, which have never been tested, and clearly that makes scaling even more difficult. But with that said, there are examples of companies that have scaled successfully. I think Orb is a good example from yesterday when Damien has gotten to the point now where he's at a fairly significant stage as a company. But it was obviously a lot of hard work, and he talked about the challenges and how much iteration and experimentation was required to get the model right. I think a lot of the entrepreneurs in the last 2 days have discussed many of the challenges they face to scale. I mean, what I've seen as an investor, which is not exhaustive, but it's what I've seen looking at the kind of companies that we look at as a fund. Clearly, one key issue is the right model. Having be able to create the commercially viable model that can scale, which means really having a clear economic value proposition for the customer, and along every step of the supply chain, which is not easy. That's difficult, and I think that's one area that a lot of organizations struggle. I think operational capacity is another area. I think what one of our advisors calls it the plumbing of a company. Right, building the mundane parts of the company, the processes, the procedures, the governance, the risk management, the financial management systems, the MIS. Right, it's not easy. It's a lot of work, but critical if you're going to scale your company. Next, organizational capacity. A lot of companies start with one promoter or two, and it's not easy. To grow an organization and to get depth in the organization. It's always a chicken and egg as well with financing, right? Financiers a lot of times want a good management team, but in order to get that team, you need money to pay them. And that's a struggle that a lot of companies have, is to really get the depth of the management team. Not to be a one-man show, but to get the depth in the first line and also the second line of the company. And then, of course, the big one we've all talked about is financing. Getting the right financing and sufficient financing, which we've already discussed in detail. But in terms of, we talked about the right financing, but in terms of enough financing, sometimes I find that companies prefer to take smaller amounts of financing now because they prefer to, they think that they can build more value and maybe get a high valuation later. And what we see again and again is, the availability of funding could be available today, but not available tomorrow. And fundraising takes a lot of time and effort, a lot. It just sucks you dry in terms of bandwidth. And I would suggest that companies think if it's available, the funding, of course, but to give yourself enough runway to really be able to focus on the business and not have to be constantly saddled with the stress of having to fundraise new funds.